there are three types of revenue: cash revenue, accrued revenue, unearned revenue. Based on the events and transactions, we may encounter three types of revenue: cash revenue, accrued revenue, and unearned revenue. If the organization give away a product or service and earn cash, we received cash, that becomes a debit, a receipt, and then we gave away the product or the service and earn revenue, revenue becomes a credit. Second type of transaction is where we have sold the product or the service, we have given it away, therefore we credit revenue, but we have not received cash. And that becomes an asset, cash to be received in the future becomes an accrued asset. And an account name of an accrued asset is accounts receivable. So we debit account receivable to represent accrued asset and credit revenue. A third type of transaction is customer is expecting the product or the service, and based on that promise, organization receives cash, but the product or the service has not been given, has not been delivered to the customer, to the other party. So that revenue is unearned. And the customer can cancel, can change mind or cancel the contract. And the revenue is still not earned. Therefore, we show that revenue as a liability. And that revenue, because it is unearned, it is called unearned revenue. It is a credit because maybe organization has to give away cash if the customer changes mind. Unearned revenue, it's a liability, and debit is the cash that was received from the customer. So there are three types of revenue: cash revenue, accrued revenue, and unearned revenue. What happens when the product or the service has been delivered for the unearned revenue? When it is delivered, cash is already received. We reverse unearned revenue, we debit unearned revenue, because unearned revenue now reduces, it decreases. To decrease the liability, which is normally a credit, we increase the debit side to decrease the liability, and we credit the revenue side because product has been given away, service has been given away, revenue has been earned. So debit unearned revenue and credit revenue when the product or the service has been delivered under the third scenario.